Hello, have a pleasant day. Today's class is accounts of life insurance business. I'm Srimati from Dr. Ambedkar Global Law Institute, Tirupati. Let us start how the specimen accounts in life insurance business is. So here, these accounts of this life insurance companies are to be maintained according to the provisions of Income Tax Act of 1938. The same act has been amended in the year 2000, the Insurance Amendment Act, and now the account shall comply with the requirements of Schedule A of IRDA regulations under 2002. Let us see what are the things we are going to see. Means the first one is the books of accounts, which is to be maintained by the life insurance business, and how they are going to prepare the final accounts, the preparation of final accounts. So first we'll continue with books of accounts. Here we are dividing it again to two category. The first one is statutory books and the next one is subsidiary books. So what are statutory books are? So there is register of policies. So they have to maintain the book contains various policies such as the name and address of assured, the date on which the policy was effected, etc. Like so, then that book is called register of policies. Then they have to maintain the register of claims. The books contains particulars regarding the name and address of the claimant, the date of claim, and then the date on which the claim was settled, and the date. Suppose if it is not settled, the date and ground for the rejection. And then the register of licensed insurance agents. So here this register gives information regarding the agents, their name and address, and how much the business they have done, and then how much the commission is due to them like. So these are the statutory books according to the requirement. Then what are the subsidiary books which is to be maintained means there is about a variety. So here the register of proposal, and then the first year's premium cash book and renewal premium cash book, and then agency and branch cash book, and then petty cash book, claims cash book, and all this to be maintained along with the one summarized cash book, and then the bank cash book, commission register, then lapsed or cancelled policies book, and then agency ledger, policy loan ledger. Suppose if any of the person who is taking a loan regarding policies, then they will be under this, and then general loan ledger. So all this are treated as in subsidiary books which is to be maintained by life insurance business, and investment ledger too. And then preparation of final accounts. Again, this contains some details. So these are the relevant forms under Schedule A of IRDA Regulations 2002, which is applicable to life insurance companies. So here the revenue account, which comes under Form A, RA, and then profit and loss account, Form A, that is PL, profit and loss account, and balance sheet, Form A, that is BS, that means balance sheet only. So this schedules, totally 15 schedules are there. Out of first four schedules related to revenue account, and the next 11 schedules relates to balance sheet. So we are going to see the schedules which provides the details of the summary heads in the revenue account as well as in the balance sheet. So what is the form of life insurance final account means? So this is about the following is the form presented by IRDA for revenue account. This is form A, RA. So here it should be in this format only. So the name of the insurer, registration number, date and registration with the IRDA, and this is the heading of that account, the revenue account for the year ended 31st March 2000. Any of the year it will come, and then the policy holder's name or account. And then here this is about a columns which has been divided: number, particulars, schedule, and current year's balance and previous year balance. So here first one is premium earned. So how it should be calculated means premium, and then reinsurance ceded and reinsurance accepted should be adjusted so that we will get a premium earned, that should be come under schedule 1. And then the next is income from investment. So this will not come under any of the schedule, but we have to put it here. That is interest, dividend and rent, anything is there. Then profit on sale or redemption of investment. Then last means it will be shown in within the bracket. And then the transfer or gain on revaluation or changes in fair value. Then other income which is to be specified. So the total comes under the category of A. And then commission will schedule 2, and then operating expenses related to insurance business will come under schedule 3, and then provision for doubtful debts, bad debts written off, provision for tax, then provisions other than any taxes, then all will come here. Then for the emission in that is reduction in the value of investments net, and then which is about others that should be specified. See, all this total will come under the B, head B. And here benefits paid, this is for the schedule, interim bonus paid, and then changes in the valuation of liability in respect of life policies that should be done with the gross, then amount ceded in reinsurance, amount accepted in reinsurance. So that we will get the change in the value of liability. So the total is category of C. So now we will get surplus or deficit. If it comes in minus figure, then we will say deficit, that will be denoted within the bracket. So D equal to A minus B minus C. So that we will get a surplus or deficit. Then that should be given an appropriations, that is dividing, and then first one is transfers to shareholders account, and then transfer to other reserves. So any of the reserves, may be statutory reserve, general reserve, or any other reserves that should be specified here, and balance is the fund for the future appropriations. So if you get this total D, that will be equal to the surplus. And this is about the format. Hope you understood. Stay tuned. Until the next, it's bye from Srimati. Thank you.